Hello and a warm welcome. You're watching News Now with me, Jude Sanath from our Mumbai studios, and joining me is Sumita Karir from New Delhi. Let's start with our top story first. Industrial output growth has quickened pace in June, growing at a robust 7.3% versus 5% in the previous month. The surge in industrial growth is led by manufacturing, which grew at about 7.8% as against 5.2% in the month of May. Electricity and gas supply too reported strong growth for the month. So joining us now to decode the latest IIP data is Sakshi Gupta, Principal Economist at HDFC Bank, and Gaurav Sengupta, Chief Economist at IDFC First Bank. Welcome to the show, ladies. Let me start with you, Sakshi. What do you make of these numbers? Give us your take for what these growth numbers actually stand and how they pair up against what we've seen in the recent past.
Right. Hi, good afternoon. So clearly, today's IIP growth number at 7.3 is a very strong number, well ahead of what we were estimating, close to, 5.5%. If you look at the details of the data, you pick up manufacturing growth, you look at, within manufacturing, a lot of sectors like, passenger vehicle production, you look at, electrical goods. We are seeing strong growth, over the last couple of months in these particular segments, which is getting picked up by the headline manufacturing number. Also, as you mentioned, electricity and gas, again, a very, very strong number. What is also interesting is that if you look at the other bifurcation of the IIP data, I think, we are seeing stronger growth also, if you look at consumer durables as well as non-durable production of goods, which I think is a positive signal, from the consumption side or from the demand side. So overall for Q1, I think my sense is that this IIP data that we have seen over the last 3 months, despite the disruptions of the West Asia conflict, suggests that, the economic momentum in the country has continued to kind of continued in the first quarter, which provides some sort of tailwind for Q1 GDP data that is going to come out next month.
Right, and that is something that we'll be keenly watching. In fact, Gaurav, let me ask you, these numbers that you're looking on your screens, do these indicate genuine uptick in industrial activity, or is it largely a base effect matter?
Little bit of base effect. That's why it's so broad based across sectors. But it's still genuinely good activity. If you see it on month momentum, seasonally adjusted, there is a pickup in activity. And it is not just the IIP, but other indicators that are corroborating that growth momentum in Q1 is quite strong. For example, you have credit growth, which is at almost 19% growth as of June. Within credit growth, industrial credit growth has picked up. And within industrial credit growth, we are seeing MSME as well as some beginnings of pickup of large industry borrowings from the banking sector. Listed company performance also, where now IIP is a volume indicator. The West Asia crisis impact will really be seen on the margins, which an IIP-like indicator will not capture. But company margins definitely did get some impact. Listed companies are showing a pickup of around 25% in raw material costs. But the profit growth, though softer than what we saw in the March quarter, is still relatively very strong. Non-financial, non-energy sector profit growth is still in double digits in Q1, despite the pickup in input pressure, because the revenue side accelerated even further in Q1. So the overall, I think growth indicators are quite strong. The consumer was well protected by the government of India. There was limited pass-through of price pressures. So you are seeing that rural as well as urban activity has stayed intact in terms of consumption demand. FMCG companies are also reporting that volumes have held up. So we do see that Q1 GDP will be around 7%, if not a bit higher. And there's definite upside risk to both RBI's estimate of GDP as well as ours. For the year, we are tracking at around, we have an estimate of around 6.8%. I'm pretty sure the full year GDP growth is likely to be higher than 7%, because in H2, we do expect crude oil to fall, prices to reduce. And then you will also have This strong underlying growth momentum, which is holding up in very difficult conditions, combined with possibility of margin expansion in H2 if crude oil prices ease in the second half of the year. So very good numbers, and it's corroborated by a wide range of indicators, not just IIP.
Sakshi, if I could come to you next, the fact is that private investment has largely been the missing piece as far as India's growth story is concerned. Do these numbers now indicate that companies are perhaps finally beginning to invest in fresh capacity, or do you feel that is still perhaps some distance away?
Well, look, based on this, index, as Gaurav also said, this is a volume, index. Based on this monthly index, I think it is too early to extrapolate and say that, look, if there is a expansion, broad-based, durable expansion in capacity, that is happening yet or not. But, combining this IIP data and the kind of growth that we have seen, I think not just recently, but since, the second half of last year, post the GST rate cuts that came in. If I look at what's been happening to credit growth, some of the indicators on private investment, capacity utilization, and then combine that with the industrial output trends, it does seem to suggest that there has been a pickup in demand, and consequently, because of that, some amount of expansion in capacity that, that is likely that would have happened. I think that is also getting picked up in the overall GDP data, that we have for, the second half of last year, that does show that overall investment, it's a combination of private as well as the government sector, but overall investments in the country did kind of hold up and accelerate. So our estimate is that, most likely in the first quarter of this year as well, you can see some continuation of momentum based on volume growth. However, the issue on the private investment side is that because of the continuous uncertainty on the global front and, the likely impact that it would have had on, producers in terms of, how demand is going to pan out, etc., there could be some amount of moderation or some disruption because of that. Going forward, I think as the West Asia issue settles down, I would anticipate that if domestic demand holds up, then you would see a more durable or meaningful pickup on the private investment side.
Absolutely, Sakshi. So durability as far as private investment is concerned, demand is concerned, those are going to be the key factors to watch out for. But Gaurav, let me ask you, of course, Sakshi is mentioning about the West Asia crisis, and we do see some sort of stability coming in because attacks have halted, and President Donald Trump is more keen for a conversation, for a deal with the Iranian side. And similarly, the Iranian side is also looking at that. But besides the West Asia crisis, what could be the key challenges that could challenge this kind of growth that we're seeing as far as the IIP of the country is concerned, and eventually the GDP growth?
I think the most biggest challenge right now is crude, because it can affect margin pressure for companies. The longer crude stays elevated, the longer you will have a sort of a broad-based pickup in input cost pressures on corporates. It could result in a slowdown in, let's say, the urban wage growth, because when, let's say, company performance, profit growth slows, the first, one of the few side effects is that, the expenditure on the labor side slows down. So that in turn can have a dampening impact on the urban side. The other headwind that is facing the economy is the monsoon. Though it has picked up in July, the distribution is highly uneven. Majority of the country by area is receiving deficient rainfall. But the impact of, let's say, an uneven monsoon will be felt more in Q4. It's more back-ended because it generally the impact of, let's say, a not great monsoon year on agriculture reflects on rural demand post the harvest season. So that may be more of a Q4 FY27 story. I think that's the challenge that the economy is facing. The other challenge is on the fiscal front, though right now we are a little more positive because of the West Asia crisis. Crude is still at 85, though it's come down, and we are hopeful that crude should fall sharply in the second half. But if, let's say, crude prices average around $85 per barrel for the year, suppose in that circumstance, then the subsidy expenditure on the center fertilizer subsidy, LPG subsidy could be higher than budget estimate, which again may force them to moderate capital expenditure. For the last couple of years, it's the center and state government support which has helped the capex cycle. As Sakshi said, private sector capex, though, definitely are showing nascent signs of pickup. You're seeing that in terms of the pattern of large industry borrowing from the banking sector, the fact that term loans are picking up. It's not just working capital, but term loans are picking up. All are very good signs for slight beginnings of a recovery in the private sector. But right now, the private sector is just maybe beginning to recover in terms of the capex cycle. The continued support from the government is very important, and that could come under pressure, their fiscal slippage risk. So that is the third challenge facing the economy. And also the uncertainty. So the other thing is the global uncertainty. For example, on the external front, for example, the Fed, the last challenge would be if, let's say, the Fed hikes interest rates. That will add to the global cost of capital, which would further put pressure on domestic cost of capital.
Right. Well, Gaurav and Sakshi, one can only hope that these challenges notwithstanding, growth sustains and that we see brighter days ahead, including those green shoots of recovery that sprout out into trees and stay that way. On that note, Gaurav Sengupta, Sakshi Gupta, thank you so much for joining us on News Now and breaking down some of these insights. Great speaking to you, as always.